Hey guys, GoldStreams here again. So trade took on Monday. This was sort of NY/NYSE the session. And we had, as you can see here, we had our supports marked out at 29.87. Didn't have a lot of clean range for the downside. So we had like 20 pips, 25 pips to the next support. And then obviously the next support after that was like 20 pips, 22 pips away. Buys looked a lot better. Buys looked, you had about 35, well, 38 to 40 pips for the top side to the next resistance there on the 15-minute time frame. And we were looking at the 15-minute because the 30-minute was just sort of not creating this sort of market structure that we could understand. Now, as you can see here, as the candle sort of opened up, as the previous candle closed just above resistance on the for the of the resistance level and the support, so we just had resistance close. We had the candle closing above resistance there. Sorry, I just got mixed up there with my words. So we had a resistance at 29.88. Okay, we had a candle closing above resistance. All right, previous 30-minute was already closed bullish. The 1 hour candle was still open at this point. And we was expecting the market to move up. Now, as the new candle wicked up, wicked down, and then started breaking its open price again, I entered my buys. And as soon as I entered my buys, I got put into instant drawdown of like 20 pips, right? As you can see there, 22, 21 pips. That's fine. My stop loss was below the previous 15-minute candle. It was literally just below the previous support, because if price started breaking that support again, then my buy was invalid. To be fair, I wasn't expecting this much drawdown on this trade, but it is what it is. It happened. We had to sort of just understand that as long as those levels don't get broken, then that's completely fine. As you can see, I moved my stop loss a couple of pips lower. Reason I moved my stop losses a couple of pips lower on this particular trade is spread kept opening up, and I don't trust it when it does that, because you can get a situation where spread will just open up and take out your stop loss for a pip or two. Now, as this candle now starts breaking its open price again for the second time, then if this candle comes down and breaks its own high, I'm closing the full position, right? At the same time, the risk to reward ratio on this trade at the moment is like a 1-to-1 with the way the stop loss is set. If the stop loss is moved to where like the actual low of the candle, then it's like a 1 to 1.5, right? It's 2% risk in this trade. I wasn't expecting this much drawdown. It wasn't sort of the best confirmation when we did get a lot of drawdown like that. I expected volume just to continue pushing this candle up and fill the resistance. Fill up to the next sort of resistance on the left hand side there. Now, once this candle, like I say, it starts breaking this open price, starts going into profit, it has no reason to come back down and even test its own low at that point. Full trade would be closed, expecting the range to get filled on the left hand side. I did close this position. I closed 90% of the position at around 1-to-1. Now, sorry, at around 1% profit, and I put stops at break even. You can see this looks like a volatile move, okay? And you can see that the candle's sort of not doing what you expect a candle to do, right? You expect a candle to come down, make a bottom wick, flip bullish in this case, excuse me, flip bullish in this case, break its open price, and continue moving in your direction. You don't expect the candle to sort of retrace that hard. You can tell here it's having a little bit of trouble. This isn't sped up, by the way. It's having a little bit of trouble actually moving up to the top side, and moving in the direction and in the area we want to see the candle move. Price eventually did come up all the way, right, and actually fill that area and go beyond it. But while we was in this trade, no. So once I closed at 1%, so I closed at around 15, 16 pips. I closed 90% of the move there. That gave me about 1.2% profit. The rest went into break even, and the trade came down and hit B. I won't be taking any more trades today. That is me for the day, literally finished. It's done. I would rather walk away with 1%, 1.2%, 1.3% profit because of the decision I made, rather than try and re-enter this position or try and re-enter another trade to try and hit sort of a 2% or 3% gain for the day. I'm not going to risk what I've already won, right? So that's just it. It's just about understanding to control your emotions. If you close a trade somewhere, guys, and if you come to the realization that, you know what, this is where I want to close my trade, this is where I'm going to part ways with my money, and this is what I'm comfortable with, then understand that that's your decision. You made that decision, and walk away with that, right? There's no point in trying to come back into the market and trying to take something else out of it or trying to enter a second position unless you see a valid setup, right? And that's your plan. But just stick to your trading plan. As long as you stick to your trading plan, you manage risk very well. 1% a day is more than you need to become very, very profitable in this game. Trust me. But yeah, I hope you enjoyed the rest of the video. Thank you for watching. And guys, like always, make sure to subscribe and like. It really does help a lot. Thank you, and look forward to doing the next one for you.